Welcome to Earnings Central. In this video, we'll break down Asana's third quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q3 was $180.6 million. The company actually reported revenue of $183.9 million, surpassing expectations by 1.8%. This quarterly revenue also marked a 10.5% increase compared to the $166.5 million reported in the same quarter last year. Moving to adjusted earnings per share, or EPS, the original estimate for Q3 was a loss of 7 cents. The company actually reported a loss of 2 cents, exceeding expectations by 5 cents. This result also reflects a 2-cent improvement compared to the loss of 4 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First up, Asana saw impressive growth in their core customer base, expanding by 11% year-over-year. This might seem modest, but in today's challenging tech landscape, it's a solid achievement. Even more impressive is their growth in the enterprise segment. Customers spending over $100,000 annually grew by a robust 18%. This signals that Asana is successfully moving upmarket and attracting larger enterprise clients. The dollar-based net retention rate came in at 96%, which might sound low, but it's actually a sign of stabilization. Remember, this is a trailing 4-quarter average, and the company highlighted that in-quarter retention is actually improving. Another bright spot is their remaining performance obligations, or RPO, which grew by 21% compared to the same quarter last year. This metric represents contracted future revenue and suggests strong customer commitment. On the profitability front, Asana reduced its operating loss margin to just 4%, showing meaningful progress toward financial efficiency. This is a significant improvement from previous quarters and demonstrates the company's disciplined approach to spending. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The headline news is the launch of AI Studio, which marks Asana's entry into becoming a truly multi-product company. This isn't just another feature. It's a fundamental reimagining of how work management platforms can leverage artificial intelligence. AI Studio represents a strategic shift. Instead of standalone AI chatbots, Asana is embedding AI directly into workflow processes. This means AI actions are automatically triggered within existing work structures, creating a more seamless and integrated experience. Another standout insight is the strength of non-tech verticals. Asana is successfully diversifying beyond its traditional tech customer base. Sectors like manufacturing, consumer retail, and healthcare are now driving growth, with non-tech verticals growing 15% year-over-year. The company is also introducing an innovative consumption-based pricing model with AI Studio. Unlike traditional seat-based licensing, customers will pay based on workflow executions. This could potentially unlock significant revenue opportunities that aren't constrained by traditional seat counts. Importantly, Asana remains committed to profitability. CFO Sonali Parekh outlined clear strategies to improve operational efficiency, including optimizing R&D investments, streamlining sales and marketing, and reducing discretionary spending. The enterprise market expansion is another critical focus. With events like the Work Innovation Summit and targeted vertical strategies, Asana is deepening its relationships with large, strategic customers. The company is not just selling software. It's positioning itself as a strategic partner in digital transformation. Looking ahead, Asana seems poised for an interesting transition. The combination of AI Studio, diversified vertical strategy, and a laser focus on profitability could be a game-changer. Of course, we'll need to see how these strategies play out in the coming quarters. But for now, Asana appears to be navigating the challenging tech landscape with creativity and discipline. That wraps up our recap of Asana's third quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.